Hi, this is 9 Dots Property Solutions and Synergy Real Estate Team, and we have put together some information for people who are late on their mortgage payments and are looking for ways to keep their home. At 9 Dots Property Solutions, we love success stories, and we want you to create a success story of your own. Since the foreclosure clock is ticking, we have done the research for you in order to save you time and energy. So let's get started. What is default? Default is when you are late on your mortgage loan by 30 days or more. At the 30-day late mark, your mortgage company reports an official 30-day late notice to your credit bureaus, and every 30 days the late notice is extended to a 60-day late, a 90-day late, and so on, until the loan is satisfied in some way. So what are my options? Truth is, you have a lot of options. Right now, you are at a crossroads in your life, and you have some very important life decisions to make. We are here to provide you with some options, empower you with some education, and provide you with an opportunity to consult with one of our Stop Foreclosure ambassadors for more details, should you not get your questions answered here. First things first, are you sure you want to keep your home? Or would you be excited about a chance to get out from under this home and start a new life? The reason we ask this is because people who are suffering of financial distress often qualify for what is called a short sale and are almost always able to sell the home with $0 invested into the sale of the home. And they usually get 100% debt relief from their mortgage lender, allowing them a chance to sell the home and bring $0 to closing, even if the home is upside down in value by several $1,000s. Also, you would get a chance to stay in the home for a few months without making payments, giving you a chance to save up money for your next home. If you'd like more information about selling your home and bringing $0 to closing, even though you owe more than the home is worth, we specialize in this type of transaction. So please call us today at 303-991-6680. For now, let's explore all of the keeping your home solutions designed to save your house. As you can see, there are 4 main categories of keeping your home. These are refinancing your existing loan, borrowing money, loan modification, and workout agreements. Each of these categories has several creative and innovative solutions to potentially solve your mortgage problem. However, they also come with their own advantages and disadvantages as well. Let's explore in more detail a few of the plans available to you. Option 1. Refinancing. Let's assume that keeping your home is very important to you and you are within the 30-day late period, so you are not yet in default, but you know you are likely to be late. If that is the case, refinancing may be the best solution for you. Refinancing is when you pay off your current loan with another loan, usually to reduce the interest rate to lower your mortgage payments. If you have some equity in the home and can prove your income, refinancing to a lower interest rate could save you hundreds per month. Refinancing is the first of the options because we are assuming that you are not yet in default on your loan, and this is the best time to get a new loan while your credit is still intact. Option 2. Borrowing money to reinstate your loan. Look, feeling embarrassed and burying your head in the sand is the fastest way to lose your home to foreclosure. The truth is that about 1 in 7 people who have a loan are struggling to make payments or are already in default. We found that people who are willing to share their story and who are clear on what they want are much more likely to keep their homes. If you are not in default yet, it still makes sense to protect your credit and ask for support from your peers. Here is a list of sources that you may not yet have thought of to borrow money from: friends, family, churches, advance pay from boss, sell and liquidate some assets, give or get donations, get a second job, use retirement account money, use Money Tree or payday advance loans. Now let's suppose you are now at least 30 days late on your mortgage loan and are officially in default. This changes the dynamics of your situation considerably. At this point, the mortgage company has what they term a non-performing asset, meaning that their loan is not performing as it is supposed to. The mortgage company has a protocol that triggers a collections department to respond on their behalf. The collections department will call you daily until they have come up with a solution to repay the loan and late fees. Don't let this collections department scare you. The truth is that because you are now in default, your lender is more motivated to come up with a solution for you. These solutions fall under the categories of loan modification and/or loan workout agreements. A helpful hint is that the people who are calling from the collections department are not the same people that help you with a loan modification or a workout agreement. These options are handled by the loss mitigation department, not the collections department. The first thing you're going to want to do is contact an experienced loan modification professional and discuss your unique scenario. They can consult with you respect to your lender's options and your ability to qualify for loan modification. We have an affiliate relationship with the best loan modifiers in the business, so please call us today for a free, no-obligation options interview today. You can call us at 303-991-6680. So what is a loan modification? Loan modification is a permanent change in one or more of the terms of your loan. It gives you a fresh start and results in a payment that you can afford. The sole purpose of a loan modification is to enable the borrower to meet the terms of the new loan for the foreseeable future. And the number one myth about loan modification is that you have to be late in order to get a loan modification, and this is simply not true. You do, however, have to qualify for a loan modification. Loan modification has three main categories which would change the terms of your loan. The most common are a principal reduction, an interest rate reduction, and a conversion from an adjustable rate loan to a fixed rate loan. So option number 3 falls under loan modification category and is in the form of a principal reduction. A principal reduction is when the mortgage company reduces the principal balance on your loan. You will most likely need a professional who knows how to negotiate this complex option with your mortgage company. The end result is that you have lower payments and your total debt is reduced as well. Option number 4 is an interest rate reduction, which also falls under the loan modification category and is defined as when the mortgage company permanently reduces an interest rate on your loan. This will lower your monthly payments only, but not the total amount of debt owed. Option number 5 is also a permanent loan modification and is a terms adjustment, usually in the form of conversion of your loan from an adjustable rate mortgage to a fixed rate mortgage. If for some reason your loan modification fails or is rejected, there are still 5 types of workout agreements between you and your mortgage company. The first of the workout agreements is called reinstatement of your loan. This is the 6th option to solving your mortgage problem, and this is when you pay your lender back all of the missed payments and late fees to be completely back on track. Sometimes you may perform a loan modification first, and then the lender reinstates your loan and waives the missed payments and late fees. Basically, reinstatement means that you are back on track with your loan payments. The 7th option to solving your mortgage problems is also a workout agreement. This one is only for FHA loans and is called a partial claim. This is when FHA will lend you the money you need in order to reinstate your loan and will place a second mortgage on your home with no payments or interest due. The loan must be paid off at the time of sale or at the time of refinancing your existing financing. Number 8 on our list is a repayment plan and is a workout agreement. This is when your mortgage company sets some special terms and plans for you to make partial payments in an amount more than your typical payment until the late fees and payments have been paid in full. A forbearance plan is the 9th option and is also a workout agreement. A forbearance is when your mortgage company provides you with a temporary relief or reduction in the mortgage payment to support you through a hardship that is foreseeably going to end, such as a surgery causing you not to work for a certain period of time. And number 10, last but not least, is called a temporary indulgence, which is also a workout agreement. This is when your mortgage lender extends and stretches the 15-day grace period to a 30-day grace period or more. This is for people who can show that they are coming across a large lump sum of money. As you can see, there are several options available to people who are having trouble making their mortgage payments. 9 Dots Property Solutions are people who are stop foreclosure ambassadors and who are no boundary thinkers who can align you with the right professionals to help you either keep your home or help you stop stressing by selling your home. Our in-house team of loan modification specialists will analyze your current situation and provide a workable plan that is acceptable to both you and your lender. Call us today for a free, no obligations options interview today at 303-991-6680.